Hello, everyone, and welcome to TBR's webinar, Rise of the SaaS-led AdTech Vendor, with TBR Senior Analyst Seth Ulinski, Principal Analyst Patrick Heffernan, and Vice President of Research Stuart Williams. I'm Justin Surgent, and I'm hosting today's session. Digital marketers and agencies are embracing data-driven, programmatic ad tech solutions. Vendors support clients with models that combine managed services and SaaS. The mix of managed services and SaaS varies by segment and vendor, impacting go-to-market strategies and business performance metrics. The insights from today's presentation come from TBR's AdTech Vendor Benchmark, which provides insights to market trends, including leaders and laggards of the AdTech segment. If you have any further interest in subscribing to or learning about this benchmark, please feel free to reach out to myself or one of the analysts after the presentation. Before I pass this over to the analysts, there are a few housekeeping items I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others we've posted. Second, we'd like to hear your thoughts and opinions on the material we're presenting. Please send any questions or comments to the Q&A function. We'll address them at the end of the webinar. Third, we'll send out these slides to everyone registered for today's webinar within 24 hours of the conclusion of the webinar. You can also find the slides, as well as our thought leadership pieces, other webinars, and commentaries on SlideShare at slideshare.net/TBR_market_insight. Now let me introduce the analyst presenting today. Seth Ulinski is a senior analyst at TBR's digital practice, leading coverage of ad tech and digital marketing platforms. Seth provides analysis of public and private vendors, as well as industry trends, landscape analysis. Patrick Heffernan is principal analyst here at TBR's professional services practice, and is also a content editor on TBR's AdTech and Digital Marketing Services Benchmark. Stuart Williams serves as Vice President of Research, engaging TBR clients to promote the value of business insight that helps them improve their business performance, capture opportunity, and increase customer engagement. He also leads the TBR digital practice, which covers the AdTech and digital marketing segments. And with that, let me hand this over to Seth.
Thanks, Justin, and thank you everyone for joining us today. We're excited to share some key findings that we've accumulated over the past 6 months. So while we will touch on the benchmark key findings, we're also going to discuss some of the general trends that we're seeing across the ad tech industry, and I think there's a lot of interesting scenarios and stories playing out, and we certainly look forward to addressing any questions at the tail end here. So starting off, software as a service, or SaaS, is definitely taking a major foothold in the market today, and we're really seeing that the vendors who are best positioned to support a SaaS delivery model to clients, and that includes agencies as well as end users or marketers, they will definitely be best positioned going forward as we do see SaaS increasingly being consumed and the preferred method of delivery. That's not to say that managed services goes out the window completely. We definitely see an opportunity for that side of the equation as well. So as far as ad tech, it's certainly a nascent and growing industry, and you could argue that it's been in transition since the day it was hatched. These bullet points here that are on the first slide, these are the talking points that we'll speak to today, and again, we're certainly happy to address questions at the conclusion here. So as far as the market, we definitely wanted to provide a rough ballpark estimate on what we envision as the ad tech opportunity, and that includes both managed services as well as SaaS revenue. As mentioned, in the opening here, SaaS is certainly on the rise. Adoption is definitely becoming widespread both at the agency and the brand level. Business models are definitely changing within the major agency holding companies. So historically, where they were partnering with ad tech vendors in a managed services capacity, increasingly they're actually taking control of the platforms via software as a service and engaging and in optimizing campaigns in that manner. Trifecta, everybody loves the use of trifecta, so we're talking about increased digital ad spend, big data, and software as a service. So when these three elements come together, you're really seeing a tremendous opportunity for the current stakeholders, that being the ad tech vendors, the content owners, and agencies, but increasingly you're seeing adjacent industries and major stakeholders either partnering, setting up alliances and the like, or they're making direct investments by acquiring ad tech vendors. So that's certainly a theme and a trend that we see as increasing as SaaS usage continues. Go-to-market strategies are definitely in transition. So the adoption of SaaS is really impacting how vendors are going to market. So one needs to just look at a company like Rocket Fuel, which was almost exclusively working or delivering services to clients via managed services. They made a very large acquisition in order to address the SaaS-led initiatives that are in place now. And with that said, we will actually, as far as the chess pieces there, not that the ad tech market was a game of checkers previously, but I thought it was interesting that there's so many different stakeholders and people, you know, taking action in the space that it is indeed becoming more of a chess game. I don't know if Stuart or Patrick, you wanted to make any comments here on this initial flash.
Certainly. So ad tech in many ways has made its first big transition. It's an accepted technology. It's generating significant amounts of business both for adopters and for the vendors. But it's in the awkward teenage stage. It needs to grow up and get to true scale in order to fully capture the opportunity that's presented in front of it as traditional advertising gets switched to digital. So what drives that are two things, and we'll talk about that in detail in this presentation. One is, you know, the growing maturity of the buyers and their ability to use. The second thing, which are tools and platforms.
And this is Patrick Heffernan. The only other thing I would add is that from our perspective in the services space, consulting is going to spike in the next 2 years, and ad tech is going to be part of that spike. The confusion that Seth has described and the uncertainty around evolving business models is a fantastic opportunity. I think we'll see a lot of the consulting players jump in here to get married to or find some other way to partner with some of these ad tech companies.
So understanding the ad tech opportunity, you really do need to look at the overall global digital ad spend. So we've estimated that to be roughly $150 billion in 2015 and growing to $300 billion in the next 5 years. And again, as far as monetization opportunities, it's going to be a combination of managed services and SaaS, and where it's heavier on the managed services side today, SaaS is definitely going to be taking the lead here within the next 5 years. And then what does this mean for ad tech as far as the growth and adoption of SaaS? We see it hitting roughly $100 billion in the next 5 years. And while we'll call it traditional ad spend has been borrowing from radio, print, and similar traditional formats, increasingly we're going to see the digitization of TV. And so the programmatic buying that we're seeing across the digital landscape today, once TV becomes programmatically bought and sold, that's where this next massive wave of opportunity is going to come for the ad tech vendors in market today. So initially, agencies were the first to embrace ad tech, and largely they would partner with vendors via managed services. And that was fantastic when the key drivers were media performance and really just trying to maximize the number of eyeballs and impressions and drive as many sales, as an example, as they could on behalf of the client. So increasingly what you're seeing, particularly due to SaaS, is that folks are looking at ad tech as a way to drive business intelligence. So there is a treasure trove of engagement data that's being captured and collected by ad tech, and increasingly it's not just drinking from a fire hose. Folks are actually synthesizing that data and being able to consume it within the enterprise, either directly with the ad tech vendors or partnering with systems integrators, or having some sort of an integration with their back-end enterprise software stack. So where you're seeing, I guess, a shift. It was initially go-to-market strategies focused around agencies and direct marketers, include digital natives here. But increasingly, you're seeing a whole lot of new stakeholders come to the table and either take an interest in ad tech or partner with ad tech vendors, and that includes management consulting firms, as well as IT services vendors, data specialists, and, of course, enterprise software vendors themselves. I don't know if either of you would like to add on.
Yeah, certainly when we talk to folks about how they're using digital media for their advertising, tracking ads, working their campaigns, one of the frequent responses is we use Excel. And that type of an approach with mature, let's call them spreadsheets, and people who know how to be their jockeys and riders are the core of many very simple managed services. Now, there are a lot of firms out there that have more mature platforms than that, but the intelligence and the capabilities that are being developed for this can be embodied into platforms and really delivered to the end customer. And one of the things that we hear as a benefit of this is increased transparency and governance over the data that's being delivered, not just on a fee basis or the cost of advertising, but also, making sure that advertisers don't flip into a creepy realm with the people they're advertising to. That they, people are very sensitive on the other end, and having more control through a platform does give the advertisers a little bit greater ability to manage who they're touching.
And what's interesting, if you're kind of following the evolution of the ad tech space, is seeing that the end users or the folks that are being marketed to by the ad tech vendors, it's definitely expanded. So historically, ad tech was overwhelmingly consumed by agencies. Increasingly, you're starting to see direct marketers and now even CMOs and brand managers come into the equation, social media managers. So what's interesting is you have ad tech vendors now that have complete end-to-end solutions going to market against folks that are best of breed or point solutions. And, to be determined on how many point solutions a client's willing to integrate or cobble together to create that kind of ultimate piece of technology or that ultimate ad tech stack that they're looking for. But it's certainly interesting seeing how things are playing out, acquisitions. So, for example, data management platforms, there are very few left in market of the large ones that have been in market for a number of years. What's going to continue to happen here is if you look at the continuum at the bottom, today, let's say roughly 30% of business is 100% SaaS delivery. By 2020, we see that maybe hitting 70%. So it's almost a flip-flop as far as the mix of managed services versus SaaS today versus in 2020.
The reach here is incredibly important as as ad tech becomes more integrated into the overall digitization of marketing and the whole go-to-market function, as we see that working with sales and public relations. The traditional audience or buyers or consumers for ad tech are working and need to work in harmony with other key players in these functions across the organization. So integration of the offering becomes incredibly important. And with the sheer number of providers that are in this space, it's much easier for somebody who has an API and a cloud platform to manage that. It's also puts more of an onus on customer retention and driving value to the end customer rather than just being service delivery. I think I remember hearing there was an executive who talked about, if it's just ad buying that you want to do, I could train a receptionist to do that. This executive was speaking about how they were adding value by knowing the market. And that's always important, but as we've seen on the technology side, the activity of adding value to your platform is running the stack, and ad tech is just beginning to do that, moving off of spreadsheets and other homegrown tools and towards SaaS. And that integration with other elements is a key value add point. So as the as this space grows, we're going to see consolidation, acquisitions, integration into communities and ecosystems really start to take off.
And when you say consolidation, integration, all those things, you're talking about a huge role for IT services, for professional services, because as adtech starts to interact, or as adtech's buyers, on the right side of the slide, that new audience starts to change, you're going to start running into people who are more familiar with your IT consultants, your IT services folks, and they're going to want to work with them and package that all together. I'm right about that, right, Seth?
Absolutely.
Okay. Now we've talked a lot about the benefits of SaaS. I wanted to stay on this screen and say, sure, there are managed services, and there are increasing areas where the kind of human consulting, consultative relationship that can be delivered through managed services can be important for the end user. We're just suggesting that, that it focuses on more high-value areas as the market matures. And I think in our estimates, as the overall market grows, managed service total revenue will continue to grow, but just not as fast as the SaaS-driven portion of the business.
So there was some conversation at a media post event, I believe, earlier this week or late last week, regarding programmatic in-house initiatives. And I thought it was funny or ironic that it took an IT executive from, I believe it was Accenture, to encapsulate it and just say insourcing. Makes sense to me. So MarTech would stand for marketing technology. So if you look at insourcing or consuming internally ad tech, which is, of course, hopefully being integrated with the overarching marketing technology platform, this is actually pushing, we believe, the agency holding companies into more of an IT services / vendor scenario. So if you think about IBM, they are certainly a company that provides services, but they also market their own platforms. So where somebody like Publicis or WPP has historically, not owned technology and partnered with third parties in order to activate client campaigns and so forth, they've actually taken a very bold move. With WPP, for example, earmarking like $25 million to create their own internal data management platform, while Publicis outright went and bought a demand-side platform. So those two moves were pretty significant from our seat, because where you had the holding companies historically really not active in ownership, they've invested pretty significantly in two key areas within ad tech and two of the segments that we covered in the benchmark. So we certainly see that as a move that kind of mirrors what the larger enterprise IT sector has done. And again, we think IBM is a pretty interesting example to look at there. So if you shift from the outsource model that was kind of early days, let's say 2012 with ad tech, really the vendors didn't provide a whole lot of visibility into what was going on behind the curtain, or within the black box, so to speak. So certainly there were algorithms and software and real-time bidding and decisioning going on, but clients really were beholden to the vendor's response time. So maybe they received a daily report or a weekly report to give them an update on what was going on. Increasingly now, speed to market and being very real-time, I hate to throw that out there again, is critical to an enterprise. So that's where having SaaS-based platforms plugged into your enterprise marketing platform, for example, can really be a value add and can help differentiate and maybe give you an advantage competitively over your peers. So visibility and compliance have been talking points in the past several months here, where again, the agency holding companies, it's almost a double-edged sword where they're acquiring technology. Now clients are going to be maybe asking the question, well, are you using third-party software? Are you using your home-grown, owned and operated flavor? What's being utilized here on my behalf? That's just one, I guess, talking point here as far as the ownership's concerned. But really, at the end of the day, SaaS is allowing folks to get closer to the data and ultimately own it. Whereas in the past, working with a vendor via managed services, you might have had some reports. Maybe your marketing team can glean some insights from that and kind of layer it into your overall strategy going forward, but that may or may not have been the full story. So with SaaS, it really allows for a better opportunity to kind of capitalize on what's going on.
So I want to have a little bit of a roundtable here with my peers, because many times when we're doing technology research and we talk about people moving from one platform to another, the skeptic in me comes up and says, yeah, well, aren't you just trading one black box for another black box, right? So what is it that's really driving value for these end customers? If I move from a service delivered piece, if all I care about is the outcomes, does it really matter to me? Or is it about flexibility and the ability for a suite of different vendors to compete, for my business in terms of them providing innovation or transparency to the data, as you called out, Seth. So I think that just saying SaaS is the cure for this problem isn't necessarily the cure. It's not. So in some ways, you're trading one thing for another, same thing for a different version of the same thing. I think it's what does it enable is what the key questions are.
And that reminds me of the client persona research that you did around the different kinds of buyers, because the answer, I hate when people say, well, it depends on the client, or it depends on the person. But in this case, you're going to see that. You're going to see clients that want to, as Seth talked about, get closer to and sort of own their data. And then you can have others that say, hey, that managed services thing worked for me, and if we can do it a little bit better than that, it's fine. But it's really going to depend on the stuff you talked about with the client personas and how those change over time.
Yeah, so I know we're going to talk a little bit about positioning of the different firms in the space a little bit later, but to set the stage for that a little bit, we see three different types of buyers, right? There's people who want to buy all the components and set up the machine in their garage and run it. So those are kind of the people who want to own and control stuff. They're the people who want a platform, right? So they want a provider to come to them with a lot of innovation that then they can use, right? So instead of forging nails and cutting boards, I can go to the hardware store and buy 2x4s and nails, right? And then there are people who just want an outcome, right? So speaking personally, I didn't build my own house. I had somebody build it for me or do repairs on it, right? That's an outcome for me, and I don't really care what kind of table saw they use when they do it. So the key piece for the people in the market is being able to differentiate the people that they're speaking to, because there may be buyers inside certainly large enterprises who are different types of buyers, right? So it's a complex purchasing decision, so you need to position your offering successfully to them as you go across. And then the character of the overall organization will depend on do they see competitive advantage in owning it, or is the competitive advantage in the provider bringing tons of innovation to them and they work with them to get to some other outcome.
So as we mentioned, this adoption of SaaS by end users is really impacting the way vendors are going to market, and we're sharing here an excerpt, if you will, from the benchmark that we worked on. So I guess what's I should call out here, there are 4 segments within the benchmark, and so we have hybrid vendors, exchanges, demand-side platforms, which in most cases also carry a data management platform component, and last but not least, pure-play data management platforms. So as you can see, there's definitely a spread from the DSP lens or through the DSP lens as far as go-to-market strategies and where these vendors are really driving revenues. And if we're starting from left to right, looking at the y-axis, we have agency or partner-led. So that would be vendors that are engaging heavily in selling into agencies, or they have heavy reseller channel alliances, versus a more direct-to-client engagement model where there is no agency. The vendors are ultimately signing deals directly with marketers. And then looking at the x-axis, the delivery model, again, managed services versus SaaS. And while I'm sure pretty much all the vendors that we're covering would argue that 100% of their business is delivered via software as a service, we're actually looking at the business that's truly run by the client on the client side, where they're signing an MSA, for example, with a vendor, and the client's team are owning and operating the tools, so to speak, versus the vendor's in-house client services team doing it on behalf of the marketer or advertiser. So that's just one thing we had kind of call out here. In addition to that, the volumes or the size of these bubbles represent net revenues. So in the benchmark, it was a challenge, but it was a welcome challenge, identifying what was actually revenue versus pass-through or a traffic acquisition cost or a data acquisition cost, for example. We really wanted to boil down and create a level playing field and identify true net revenues across all four of these segments. And for anyone on the call here who's playing inside baseball and knows ad tech well, there are a lot of variables that may be flowing through programmatic pipes, for example, that could really inflate what a vendor's revenues look like. So at the end of the day, again, we just wanted to really call out and highlight true net revenues for these folks across these segments. And increasingly, what we think is going to happen is with this adoption of SaaS, of course, if you're looking at somebody like Rocket Fuel, they've made a significant acquisition in the past quarter or two, X+1, and the primary driver behind that was due to the fact that X+1 had a robust SaaS platform as well as data management features. So that's one move by one of these vendors here. Criteo, I would anticipate, is probably going to roll out a self-serve platform at some point soon, but they've been able to really capitalize on being a specialist from a remarketing standpoint and pairing that with the SMB market. So as Stuart was pointing out earlier, while SaaS might be a trend and on the rise, so to speak, managed services will continue to be a critical component. And depending on the market and the end user and so forth, we definitely see that as being an opportunity going forward.
So this is an interesting view. It's kind of a redistribution of the data that we normally present in our business benchmarks. As on the x-axis, it's operating margin. On the y-axis, it would be growth. So here we're taking the data and we're qualitatively distributing it by these different delivery models, right? So how do they engage with the clients and how do they deliver their services? So this is a view that we're going to track over time because we recognize this is a big trend in the industry. And in our end customer research, we're definitely going to be asking people about their reception and how they prefer to consume these things. So we'll be forecasting ahead where they're moving. Overall, though, we see the dollars that each one of these firms capturing being driven by greater and greater percentage of SaaS-driven business. So we would expect that the SaaS portion of the business for those managed service-centric companies is going to shift them more to the right, or they may have a subdivision. They may fully divide their business and have a very separate managed service division from their platform. And the total volume of revenue captured by the SaaS is going to begin to dominate this view, right? So the SaaS-driven models will capture more revenue over time than the managed services delivered volumes will.
And it should be noted that, yes, there are certainly some publicly traded companies here, but I believe more than half are private. So with that said, definitely appreciate the guidance and conversations with a lot of the executives, including CFOs, CMOs, and other folks as we went on this journey to kind of encapsulate what was going on and what was driving the ad tech market. Wanted to address one question we have here, and do you believe in 2020, 70% of revenues will be pure SaaS or some version of co-managed? Great question. I don't think 70% is a stretch. I think that is doable for sure. I think that based on what we're seeing for trends currently, that is achievable. And then, of course, it's not that managed services isn't growing, it's just not growing as fast.
Yeah, when we think about the overall shift of revenue from traditional advertising to digital advertising, the volume so that's probably, total advertising dollars are probably growing at 4.5% or 5%. And then, but the shift to digital, we see, by 2020, at least 50% of ad dollars will be digital. So that's a huge spike, and really the only way for the advertisers to get visibility and control over that volume of spending is to use more and more platforms, and plus the ability for the vendors to capture that space, to scale up that business. It's much harder to add the next bodies on a managed service business than it is to scale out a platform. So the platform companies have, if they can deliver comparable service, have a scalability advantage to capture that market.
And from a segmentation standpoint, I realize that no vendor wants to necessarily be labeled because everybody's a unique flavor of ad tech. So that was a little bit of a challenge as well. But I guess the rationale behind this was, where do we see these vendors most aggressively going to market as? So, for example, Turn, while they certainly have a data management platform capability, we saw them predominantly going to market as a DSP, and then we certainly wanted to have a DMP segment called out with pure plays. Certainly that's been a very hot area. For example, we had 3 vendors that were independent when the report started, and now there are only 2. So X8 was acquired by Nielsen, and again, that's an interesting example of what I would call an adjacent industry, taking an active interest in actually acquiring an ad tech company. So again, the trifecta that we're calling it here of ad spend, big data, and SaaS adoption is very attractive for companies that might have just tangentially, worked with ad tech vendors, or maybe they operate in technology in some capacity, but all of a sudden they realize the data and analytics that ad tech can carry into their organization and potentially differentiate their company. There's a whole bunch of stories playing out here. I had a couple of questions on why we didn't include AOL or Yahoo as ad tech vendors, and just from my seat, I had a really difficult time kind of teasing out their technology versus their media business. And I think for the most part, folks would still view them as media owners. They're certainly both making investments and trying to break free of that legacy, we're a media company first label that they had. But, we had to kind of figure out where we could initially identify companies and their revenues, and we just had a difficult time with both of those out of the gate.
The attractiveness of this market is immense, and the needs of the go-to-market function, across, marketing, advertising, public relations, and sales, for them to do their function and to integrate, use digital tools, is certainly pulling in vendors from all over the landscape. And because of that, there's significant professional services opportunities wrapped around this. So we see, this is a very, very lightweight map of all the people who are trying to rush into this space and capture some of the dollars that are either directly attributable or attached to advertising spending. Again, it's always great when you're the one who's on the front end of the revenue generating cycle, and advertising certainly is incredibly key to that, and building that as a digital relationship over time with customers, as we can do now, even makes that function even more powerful.
It's better to be strapped to the front of the bus than run over by it, right?
Yes, much better.
So that when you look at this and you see digital agencies, there's a companion benchmark to this that we just released on digital marketing services, And Accenture is actually the largest in the world right now, according to our research. IBM is right up there. Ogilvy and Mather is, I think, in third, or IBM is second, and Ogilvy and Mather is third. But anyway, all of them, all the digital marketing services vendors are finding ways to work with ad tech, because particularly a company like Accenture that has traditionally been vendor agnostic and will look to anybody to provide that technology solution. They're a perfect marriage or a perfect partner for an ad tech company that's looking for the relationships, the permission to play, the scale that somebody like Accenture has. And then at the other end of the spectrum, there are even the strategy houses like a BCG or a McKinsey that bring in that digital strategy but don't have the technology at all. And so to be able to partner with them, it's a massive opportunity.
Yeah. And then, yeah, when we think about advertising, digital marketing as systems that really drive interaction with the customers and communities, we're also in our coverage thinking about Internet of Things and how machine-to-machine data are also elements of geolocations and other data as part of understanding the marketplace and what's actually happening. All of that, there's a lot of new vendors in that space, but a lot of the traditional back office systems of transaction vendors are getting in on this as well. So Oracle, Salesforce is in there, SAP, Microsoft, the long list of IT vendors who are really moving. They recognize the opportunity and the transition of this. And one of the keys here really is about, and one of the reasons why it's so attractive to the services and strategy firms is this transformation capability, right? You're using technology that used to be, confined to, looking at record keeping and payment processing and orders and ERP and stuff like that. Now you're engaging with the customer using them, and that is this very significant opportunity shift. So this is the key to the transformation. So focusing back on ad tech, big dollar opportunity, and it's an extremely important component of the whole go-to-market suite.
So wanted to share a couple of snapshots of key vendors that were kind of bubbled up during the course of the ad tech benchmark creation. One company that we wanted to note here was Rocket Fuel. So they were largely focused on servicing major U.S. agency clients via managed services. So they had an internal team, and they basically acted on behalf of the agency for almost 100% of their business up until the acquisition of X+1 recently. So they're certainly a company that has a lot of tech under the hood, so to speak, but they're now tasked with putting that horsepower in the hands of the end user via a user interface and software as a service. I believe it was yesterday their CEO announced that he would be stepping down. So this company is definitely in transition, and again, that plays into the overarching theme, hey, ad tech is on the rise, but it's certainly a market that's in transition. It's highly dynamic, and if you're not looking several steps ahead, you might be in this sort of a situation. Criteo. So while, again, we're talking about rise of the SaaS-led vendor here, Criteo has excelled and dominated in the remarketing space exclusively using managed services. So this is one instance where they go against the grain, and there are a handful of reasons why they've been successful. They were certainly one of the first companies to market doing this. They've been successful in Europe, and they've just recently penetrated the U.S. market. And their focus, while they definitely have a handful of what I would call major brand advertisers, they're really focused on the SMB market and e-commerce clients in particular. So they have made a handful of what I would call tuck-in acquisitions to expand capabilities, mobile, multi-device tracking, or targeting, I should say, email. So this is definitely a company that is doing all the right things, and I would anticipate at some point they will roll out a SaaS capability where users can bring their tools in-house. So
Seth, this is, you call out the European presence. Certainly you know, how do you, is there, you know, what's the storyline that you see, you know, internationally, right? So we have very mature markets that are jumping in. You know, we have a lot of players in this space. Is it better to be localized, or is it better to have, you know, extreme geographic coverage? Or do advertising buyers really need to have both arrows in the quiver?
Great question. I would say it's probably the latter. So you need to have a local presence in most cases, and this is probably going to change a little bit, where historically I think vendors would heavy up in major cities where the major agencies were, so like Madison Ave, for example. Ad tech vendors have a very heavy presence there. However, I could see increasingly where the vendors are setting up camp in cities that house one or two major, you know, digital ad spend companies. So, for example, Dell, I believe they're headquartered somewhere in Texas.
Generally.
Yeah, there we go. So it wouldn't be a stretch to say, hey, some of these vendors are strategically going to set up camp in the backyard of major, we'll say, Fortune 50 Fortune 50 companies that have significant ad spend at the same time, and especially those that are looking to internalize technology. So again, a technology vendor such as a Dell, for example, that would make a lot of sense. An SAP, another example. Yeah, we can continue on here. I wanted to share a few more examples. So Turn, interesting company where they are the largest independent, we'll call them demand-side platform here just for keeping it simple, but they have roughly 500 employees globally now. They were very heavily aligned with agency trading desks, which they're a polarizing topic, which I'd love to chat with folks on the line here at any point in time regarding that. But as far as what they've done, which is interesting, is number one, they forged an alliance with SAP, talking to, you know, Stuart's discussion as far as integration with back office enterprise software. SAP really to date had not partnered with any media buying entity. So the fact that they were willing to partner with Turn tells me that Turn is very mature in their offering, and that the fact that they do have a very large presence, that 500 global headcount probably played in their favor. And again, Turn is currently marketing software as a service as well as managed services, and they're probably one of the vendors a little bit further down the path of kind of converting folks to SaaS versus managed services, but certainly anticipate them to keep supporting both models. TubeMogul, another interesting company. I think all these companies are interesting because I'm an ad tech geek, so to speak, but started as a video specialist, thought it was definitely noteworthy maybe a quarter or two ago that they decided to expand their video capabilities into display, but with the caveat that they were not going to go after the performance-based marketers that a lot of the display folks do. They were going to stay loyal to their end users, being the brand marketers. We talked a little bit about the overall ad tech market as a whole. Programmatic TV is a hot button right now. There's certainly been some really cool pilots launched. I think the Super Bowl was one instance where TubeMogul supported a couple of brands that ran programmatically managed TV spots. I thought that was pretty interesting. And again, this company's actually done a lot from an education standpoint. So TubeMogul University, they actually hosted an event where they flew clients out, and it was a couple-day event, I believe, where they really wanted to get people comfortable with the platform, with the idea that, hey, if we can do it, you can do it, and ultimately, if it's your brand and your company and this whole SaaS initiative, it makes sense for the end users to be as close to the tools as possible. So moving on, Marin Software, they've been very, very steadfast in being a SaaS-only platform. And while they certainly support clients with a managed services, or support clients with an internal team, it's definitely more advisory and not Marin Software's team flying the airplane, so to speak. It's advice and best practices and, again, education. I think education is going to be a key theme moving forward. Which of the ad tech vendors are willing to really invest and educate their clients and end users? We'll do our best to educate on the business side of the equation, but ultimately the vendors need to educate folks on how their tools and technologies actually work. So I thought it was interesting the fact that Marin manages 10% of Google's overall global keyword ad spend. So that's a pretty heavy lift. Certainly a lot of API work going on here. And then the fact that they were willing and able to expand into display and social. They've made a couple of, again, kind of tuck-in smaller acquisitions, but if they are able to integrate and create that, seamless unified platform, that's certainly going to bode well for them. AppNexus, one of the, I'll say, trickier vendors to kind of segment and figure out exactly what they were doing, but suffice to say, they are well entrenched in a number of areas in programmatic. So whether it's trading within ad exchanges, whether it's essentially being the tools, the underlying tools for a demand-side platform, increasingly they're making acquisitions to get into other areas and investing in other areas. So the whole notion of programmatic direct, they made an acquisition about a week ago, YieldX. They have some really interesting tools and capabilities now for publishers, where before they were essentially just providing the platform and the flow through for programmatic buying and selling. Now they're going to have an analytical capability that they didn't before and be able to engage more with what I would call tier one publishers, where before they might have been, again, the infrastructure for an exchange, for a DSP, et cetera. So I'd be remiss if I didn't mention their alliance with WPP. So having some sort of we'll call it an equity swap with WPP, I thought was really interesting, where they took on technology assets from WPP, so 24/7 Media's ad server, Open Ad Stream, which really probably wasn't a good fit with WPP long-term. Now that's being managed by AppNexus, and I think there's a tremendous number of opportunities where, they've got the pipes, they have the ad server, and now they've got some analytical capabilities. So one thing that came up in conversations with them is they really don't view their delivery as SaaS-based. It's more of platform as a service or PaaS here. So there's kind of, I guess, financial implications and accounting nuances that are beyond my pay grade here, but that was interesting to learn along the way.
Yeah, I think this is Stuart. I think one of the interesting things that firms that are in the IT segment, the IT tech vendors, they tend to make complete acquisitions and then integrate them. I think the WPP strategy, when we've seen some of the agency people do, is spread the risk out through more of a participatory investing. So they're used to having multiple, let's call it semi-autonomous units, working underneath their holding company umbrella, right? So for them, it's easy for them to make an equity stake in a few companies that they're essentially then going to drive traffic to down the road. So it's not just the pure holding company, it's a holding company plus strategy that gives them reach. And that's something that a technique that the tech vendors certainly haven't pursued. To date, they'll make some investments, but it's not the kind of business-driven investment, relationship-building investment that we see on the agency side. So that certainly is a tool that the tech vendors should be considering as they begin to look at how to enter this space and pick winners across the thousands of companies that are participating in ad and marketing technology. So I think with that, we'll go to the last screen here, and we have just a little bit of an overview of our coverage, and we'll take some questions. So please, send your questions in via the Q&A or the chat function, and we'll jump on those. While we're waiting for questions to come in, we'll just describe the portfolio a little bit. So these are some of our key questions that we're looking to answer in terms of advertising technology. It's essentially we're looking at how is the transformation happening? How fast is it happening inside the customer base? What are the how are businesses, such as Publicis and WPP, moving along? What's the pace of consolidation or integration in the marketplace? And we're going to answer that with our benchmarks, our vendor coverage. How do vendors know? How do buyers know which vendors to evaluate? So that's going to be part of our end customer research. And then our vendor profiles are going to provide answers around how firms are driving their strategy to address their opportunity. So, so we had a question here. One is, what are your thoughts on strategic value across the y-axis? So I'm going to assume this is in the bubble chart. Do you view direct relationships, which I believe means direct to advertisers in this chart, as more valuable than agency partner-led? So the question is really around, is direct relationships more valuable than agency partner-led relationships? So we're not trying to make value judgments, we're just showing where's the money going to flow.
Right. It's a great question. So I think it's interesting if we're looking at some of the vendors here, like Adobe, for example, they are very candid that, hey, we do have a direct sales team, but we love to enable folks that are technology sellers. So, for example, SAP is one of their partners. They have an alliance with Publicis. So they really do go to market and look for the big, massive enterprise opportunity. And those are certainly fantastic when you can net them, but they are very challenging. So from a go-to-market and what's the ultimate value here, I think it depends. Certainly, there's a lot of spend being wielded by the agencies, so that shouldn't be discounted whatsoever. And at the same time, there's certainly a number of clients that are willing and have an appetite to in-house or in-source technology. So great question, and it'll be interesting to see how it plays out. Another question here. So can you speak to why Rocket Fuel acquired X+1 and if you think it was a good move strategically? Just to be totally candid, I think it was a little bit of a responsive move, and given the fact that the CEO is stepping down as of yesterday, I do think that speaks volumes. So was it a good move? Absolutely a good move. I think it of course, serves two shortcomings. One would be the lack of a true user interface in a SaaS platform, and the second would be a data management platform. And I do think that X+1 might have been a little bit stronger, as I understand it, on the data management platform side of the business, which certainly, given the way folks are investing and reevaluating, we'll say, the DMP component, I think that will serve them well. The trick is trying to marry two completely separate platforms and have something that'll be able to speak to one another, the left hand to the right.
So is that DMP acquisition, is that sort of one of a lot that we're going to see? Is that what's going to happen to the DMP players in this space? They're going to get scooped up?
I think there's going to be a lot of exits, and one of Trigit. So Trigit is an oldie but a goodie. They were one of the first demand-side platforms in market. They were one of the first Facebook Exchange partners. They were gobbled up, and some say it was in distress or under duress even. So TBD if that's the case or not. But I do think that this runway that a lot of vendors have had with the venture capital funding today is, I won't say it's coming to an end, but it's going to get tighter. So expectations on some sort of an exit are going to increase, whether that's an IPO or M&A of some sort.
So like most other industries, you're going to hit that point where the venture capitalists want to see something change. So makes sense.
So the next question is really kind of like the auto industry, right? Is the play here about vertical integration, being able to have everything in-house, inside one giant black box, or is it a horizontal strategy going to work better with individual players working across the market? So our benchmark, and those folks who are interested in it, we can share some of this with you. We've done a flow-through model of how the revenue is flowing through different segments of the ad tech space and what we see today and what we see happening in 2020. So we see some consolidation of the individual segments as we go forward. So obviously those firms that can bring together, the DSP, the DMP, all of the marketplaces, the relationships, and tie it into the marketing will have an advantage. But the sheer breadth of the market, as Seth calls out, the ability to reach micro-segmentation and have access to that market will be in some ways gated. So you still need horizontal reach to get to some of your high-value targets. That's some top-of-mind thoughts from my point of view.
Very good.
What do you think? What do you think?
No, I think it's fantastic that we're having these conversations. So I do think the notion of an open, independent platform is going to be viewed as a need almost, or highly valuable by some CMOs, where they don't necessarily want to have a vendor that has a media ownership stake in, or an ownership in a separate business that doesn't necessarily equate or align with what they're looking to accomplish. So it's definitely a hot button for sure.
All right, and I believe that's all we have for time. So thank you, Seth, Patrick, and Stuart, and thank you everyone for your questions. You can follow the analyst and TBR on the Twitter handles listed here. Additionally, before we sign off, we'd like to ask you to take a survey on today's webinar. As we research the performance of technology companies, we're also studying how our research is helping clients, and we'd like to, your feedback would be greatly appreciated. We'll leave the chat function open for another 5 minutes or so to give folks a chance to ask last-minute questions, and otherwise, we'll see you again next quarter. Thanks.